Welcome back, YouTube. You guys are tuned into the best finance channel on YouTube. My name is Nigel Schroeter, and I want you guys to get the best finance information. So I'm here bringing it to you guys daily. And of course, please don't forget to like, comment, share, and subscribe. And with that being said, we don't waste no time here. Let's get right into the video. So today we're going to be talking about debt consolidation. And what is debt consolidation? Should you get into debt consolidation? What are the pros of it? What are the cons of it? And where should you go to look for it? All those good things. So let me just go ahead and get started and get talking to you guys. So, debt consolidation is the process of consolidating debt. Video's over. Just kidding. All right. So basically, debt consolidation is a process that you go through where you're going to take your debts from other things. So it may be credit cards, it may be other loans, it may be auto loans, it may be different things. You rarely see someone do something big as a house for the reasons that I'm going to tell you later on in the video. But you're taking your other loans, and instead of paying all these little tiny payments, sending this bank $100, this bank $100, this one 50, 50, 50, all that stuff adds up, and you get all these interest charges, and there's all these different rates, and it's so much to keep up with. So instead of trying to keep up with 30 different places, boom, I had this loan product that loves me called debt consolidation loan. So I go and get one. So what does this debt consolidation loan do? Debt consolidation loans basically take all of your debt from other places and they package them or bundle them all into this one loan. Now, once they take this debt from other places and bundle it into this one loan, you have one payment with one fixed interest rate, and that particular lending product is going to be the product that is your loan. Now, when we talked about the last option for consolidating debt, and we talked about a balance transfer card, we did talk about 0% interest rates, and that was kind of something that's going to make balance transfer cards appeal to those who can get approved for them over debt consolidation loans. Now I'm going to tell you, if you're going to get a debt consolidation loan, please get one through a credit union. Don't go, these little off-brand companies, that are going to give you high interest rates. Look at your and these loans are not historically known for giving low interest rates. Okay, I'm not going to lie to you. They're not known for being, 5-6% interest rates. Sometimes you can find them, and if you do find that, it's going to be at a credit union. So my advice to you is to go to a credit union to get your debt consolidation loan and get it at the lowest interest rate that you possibly can. You go to a credit union, have a relationship already established with this credit union, have other lending products already established. This is why I always tell you, have your stuff together. Prepare for the worst. Be ready for the worst. Be ready for the war. If you don't have a job for a year, you have enough credit to cover you for a year. If we go into a situation where you need a lot of money, where can you draw it from? If you end up in a situation where you got to pay this, you got to do that, a random expense, something with your child, whatever it is, you want to be ready for war. You want to take these loans out in advance. You want to open these cards out in advance. So when the time comes around, when that time comes around that you need the credit, you already got it. You ain't got to worry about it. So get these loans and everything. Get this relationship already built and established. So now you have this relationship built with this credit union, and you go back to them and you say, "Hey, look, dude, I messed up. I messed up. I know I messed up. But what I want to do is I want to try to fix it. So instead of me paying all these other banks, you know, all this crazy interest, 20, 30% stuff like that I know I'm never going to pay back. I know I'm not going to be able to pay back. I'm in a bad situation. How about you give me a loan at a lower interest rate? Now, like I said, dealing with a credit union, maybe federal, between 6 and 18%. So like I said, you definitely don't want anything than 18% anyway for a consolidation loan. If it's higher than 18%, it's definitely not worth it. But if you can get approved for this consolidation loan, especially if you have high credit utilization, take this to your advantage. Get approved for this loan, pay off all your credit cards, and then this may give you the opportunity to get into a balance transfer card, and then take that debt, put it on a card, and then get a balance transfer card and bring that debt over to that balance transfer card. And now you can work yourself a high interest situation into a no interest situation. These are the rich. These are the manipulation factors that are being used by the rich. No, it might not happen overnight. You may get the debt consolidation loan today. Get your utilization down. And it may be 3 to 6 months down the line that you're paying, that 14 or 18% interest rate on that debt consolidation loan until you're able to get a balance transfer card, because certain banks actually look at, okay, well, does this person have personal loans, or does this person have personal loans, and does this person have anything on their report that that kind of triggers that they're going through financial crisis. So you may not want to even try to apply for the debt consolidation loan and then the next month flip into the balance transfer. You want to try and show some form of stability. So maybe you got that loan, and it's going to show on your credit as a personal loan. Maybe you got that loan for something else. Maybe it wasn't a financial crisis. Maybe you got it for an investment. And the banks can kind of see stuff like that. And if you got it and you've had it for a few months, they might go ahead and push through that card for you to be able to get that balance transfer card. So like I said, this is something that you don't necessarily want to hold for a long term. You want to pay off this debt consolidation loan as quickly as possible, pushing as much money towards it, because it's not going to have a low interest rate historically. So some people may be willing to say, I'll take that higher, 25% interest rate. I don't recommend it. I still always recommend go to a credit union first. If a credit union doesn't work, go to a bank. And if a bank doesn't work, then maybe, if you're willing to do it, go for one of those, trashier, consumer finance companies. But they just produce risk on your credit profile. So that's why I'm so much of not being a fan of them. I'd rather go and figure out another way to make extra money to pay them off, rather than go directly into one of them, or rather than to open one of them. So, of course, with that being said, thank you all for watching. Thank you all for being tuned in. We thank you all for all the support. Do not forget to like, comment, and subscribe to the channel. Share this channel out with everyone who you know, anybody who you think that these methods could help. And I will see you guys in the next video. Peace out.